You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time for TWIFO. This Week in Futures Options, our final program here of our broadcast week on the Options Insider Radio Network. Hope you like that little interlude there. Put a little something in the room. Streamed a few of our other shows there for you guys to listen to. Keep you listening, keep you having fun while we get ready to do our final show here. Of course, TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're new to TWIFO, first off, welcome. Secondly, you got a lot of great back episodes to sink your teeth into. The best way to do that, head on over to theoptionsinsider.com. Click on the Insider Radio Network tab, or just look on the right there. All the shows are right there on the right-hand side in the call-out there. You can pick TWIFO from the lineup there, and you're off to the races. All the shows available there. Also, via your favorite providers, iTunes, TuneIn, Stitcher, iHeartRadio, etc., and so on and so forth. Also available via our mobile app, available for iOS, Android, and the beloved Fire OS. Not up there on the CME Group website yet, but we'll see about getting those up there for you guys too soon. So you can go head out over there and check them out there, hopefully soon. as well. And of course, you can always get us every Friday, 1:30 p.m. Central, live via Mixlr, Mixlr. Stay tuned to our social media. We tweet out the link every week so you can grab it. And if you got time, you want to join us, ask us some questions about futures, options, activity, and volatility, and what's going on in the week. What's paying the rent out there in the futures options side of the space? Well, we got you covered. And joining me to help you do just that, my cohort, my partner in crime, the yin to my futures options yang, none other than Mr. Nick Howard, the creator of a little platform we like to use around here quite a bit called Quick Strike. Mr. Nick, welcome back to the program, sir.
Hey, man, what's going on? Good to be back.
How are things out there in the Quick Strike HQ? We hope to have you in studio, but I hear you're a little under the weather this week.
Yeah, just a little under the weather, so I felt like I didn't feel like traveling, but doing okay over here. Very busy. A lot of stuff to report at the end of the show, I think. So should be a fun half hour or so for us to have some discussions.
Get some meat on the old bone there. By the way, listeners, if you're following along live, you want to follow along with the reports live as well. The easiest place to do that, cmegroup.com/TWIO. This week in options, Nick's working on getting them to add the F, but in the meantime, it's TWIO, this week in options. And what you can do there is pretty cool. You can actually just generate all the reports that Nick and I are looking at right now, live on the fly, so you can see all the data we're talking about. I think we'll kick it off yet again, Mr. Nick. We got some good questions to get to, too. We'll get to those in a little bit. But first, let's kick it off, as we are wont to do a lot these days in the land of WTI. I guess we could kick it off first in WTI Brent, even though, quite frankly, this week, compared to a lot of the recent weeks we've had out there, hasn't really been lighting it up. That said, Mr. Nick, is there anything before we get into the mothership, flagship WTI that caught your eye out there in spread land this week?
No, I wanted to make sure we at least mentioned it because we've been talking about it so much lately that didn't want people to think that we were neglecting it, but not much occurred. A little bit of an increase in open interest, but really no trades of note. Not a tremendous amount in any one expiration. So we'll continue to watch, and maybe it's starting to fade into the background a little bit until we get some more talk to the taxing or to what's going on in Mexico, that type of thing. But for now, I think we could just sort of put a little dot on that I and just put it off to the side and pay attention to see what happens in the coming weeks.
Yeah, it was a good ride. Can't last forever, right? Things have to slow down a little bit. You can't tweet every minute of every day to drive some activity in this one. And of course, this involves a lot of international wrangling and legal and tax minutia. So those things are bound to rear their ugly heads yet again. And I'm sure we'll get a lot of back and forth action back there in Brent WTI spread land. For now, let's move on to the mothership Crude. That's where we've had a lot of focus. A lot of you guys are crude heads out there. I'm not sure what the actual term. I know Goldbug is for gold trade. I'm not sure what the crude fan term is. Maybe you know it, Nick. You can chime. Maybe you guys listening out there, you can let us know. Hit us up if you know the term. As long as it's not too derogatory, we can read it here on the air. All right, and looking at what was lighting it up this week, and net overall, then the futures had a bit of a swing this week, but net they ended up off about a handle or so. We're still kind of locked in that mid 50s or so range. So all of you guys who've been writing in saying what's it gonna take to bump the vol? Wasn't this week. We still see vol. I mean, it was up a little bit this week, but overall net vol is still just eroding across the board out there in crude land. No matter where you look, front month at the money, WTI, OIV, wherever you're looking, these numbers are just hovering around near-term lows here, which is again perhaps a good sign if you're out there looking to buy some premium. Again, depends where you're looking on the skew. We'll get to that in a second. But still, interesting stuff out here. Crude vol determined not to budge. I think it's really going to take another little shock to the system like we had back in November with the OPEC cut to really kind of budge crude vol out of this range that we're in here. It just doesn't. Nothing seems to move the needle there, Mr. Nick. But looking at the week that was a pretty aggressive week, open interest up about 8%. Again, you guys can follow along. cmegroup.com/TWIO to see all these numbers for yourself, and including yet again the front month leading the charge out here, Mr. Nick, with almost half, 49% of all the paper going up this week. Coming up in the actually April timeframe now, we've switched a gear out here in terms of the front month When we're looking at where the action was, it's still a question every week. People want to know, is it the 50 puts? Is it double calls? This week, it was 50 puts edging them out ever so slightly, about 19,000 and change of those April 50 puts going up. Lion's share of those on Wednesday and Thursday, about 4,000 and 5,000 respectively, going up on those 2 days. So nearly 10,000, 9,000 and change on both of those days. A good chunk of those opening, so a fair chunk in the middle of the week. Number two, though, right on the hot on the heels, was, of course, the 55, the double calls, with about 17,000 and change. So that very tight risk reversal strangle, call it what you will, still in play. Still a lot of back and forth. The Bulls loving the 55 strike, the Bears loving the 50 puts. So that song and dance continues this week. The lion's share of those, again, kind of coming in similar trade here on Wednesday and Thursday, about 4,000 and 5,000 yet again on change. So about a little more than 9,000 of that 17,000, a little over half coming on Wednesday and Thursday of this week. So interesting to see how that was playing out. Then number three, we got to go all the way out to actually mid-year. We're already talking mid-year options here, Nick, which is kind of crazy. The June 60s with about 12,000 of those going up. So a little bit longer term, a little bit more optimistic, perhaps reflecting a little bit of a sentiment shift out here. Again, it's just one strike, so don't read too much into it. But that said, this is an interesting one, about 12,000, nearly 13,000 of the June 60s going up, including about 2,500 on Monday, 4,000 on Wednesday. Some of that closing, though, another 3,000 on Thursday. So a good chunk, again, Wednesday and Thursday being the big rockin' and roll'em days this week out here in WTI, at least from a net overall options perspective. And we were talking about the vol, like I said, creeping up a little bit this week, but still nothing really to write home about. Same to be said for the skew, Mr. Nick, but I'll let you dive into that with your quick skew analysis. Again, the quick skew listener is something that Nick and his team put together over there to help you look at the skew a little bit more natively to see how the call wing is moving independently from the put wing. So you can kind of do a little bit more of the analysis yourself rather than looking at one number that say the skew is X. That doesn't really tell you what's going on. It doesn't tell you the big picture. So that said, Mr. Nick, give us the big picture. What's cooking out there in WTI skew land?
Yeah, you hit most of it. Remember, March rolled off this week, so a lot of that increase in the April and the May is going to come from people rolling that position into the next two contracts. So you covered where the big numbers were coming in the first two or three contracts. The keeping in mind still, even with the roll off, still a pretty hearty increase in the open interest at almost 8%. And a majority of that coming in the first, in the 2017 years. And then, as I always try to remind people, or as I was reminded to remind people last week, go up there to the expirations button and click on the June 2018 and the December 2018, and you will start to see some other interesting things happening in the report as well. Because remember, we don't see much trade in that part of the curve yet, but we do see trade in the June and the December contract. So when you do turn those on, a couple things to note is that we are seeing a little bit more upside optimism as we push out on the curve. So in November contract, you'll notice that the 80 strike traded, and then a fair amount traded in the 70 strike out into December 2017. And then if you go out to the December 2018, we had the 120 calls trade. So that's a pretty high level of optimism for the price of crude. So I don't know, those might be a nice sale. What do you think, Mark? I think that might be a good idea to sell those way out there.
It's but who knows? Tad aggressive out there on those. I'm not sure if I'm feeling that long-term of a love out here, but it is nice to see a little bit of a disparity of opinion, not just double calls and 50 puts lighting it up, but people actually mixing it up a little bit. We got June 60s, you're talking about longer-term, higher strikes. So nice to see a little bit of a disparity of opinion this week.
Yeah, for sure. And again, like we've been mentioning all along, if we continue to look at the volatility, we're not seeing, as you like to say, there's not much love for the crude volatility. So we're still sort of trending sideways here with this. Futures did not do much at all. We stayed within our same tight range that we've had for the last couple of weeks. Volatility sort of followed suit. We didn't see much change there. We saw a little bit, a little pickup and a little letdown then again, and we're actually I think for February so far, we have our implied volatility is actually over the actual volatility for the underlying. So Actually, that's probably for all of 2017. So in December, we weren't seeing that. So, there's some interesting things going on with volatility here. So it's going to be, again, one of those things you watching the news. I think there's going to be very news driven. There was some reinforcement with OPEC participants in terms of them and their production numbers, that type of thing. So that gave a little bit of a boost, I think, early. And then I think from there, it's going to continue to be what we hear from them, what we hear in the news, what we hear in terms of supply from the different numbers that are coming out. And then until unless we hit some fundamental point in the charting where we're going to see a push up or down, I think we're going to continue to see this sort of sideways trend and this volatility. We don't know that it's necessarily going to continue to get beat up or pushed any lower, but it's not going to go anywhere anytime soon. And if you look at the historical chart, I'm just looking at the April historical chart right now, we really have traded pretty much between, from the middle of December till now, between 25 and 30 volatility percent. So not a lot happening there. As far as the skews going, we had a little bit of a positive increase this week, meaning the calls in comparison to the puts are a little bit more expensive. But if I take a look at the quick skew numbers and see what they said, what we have is a little bit of a decline in the puts and a little bit of an uptick in the calls, but not a tremendous amount. So we're starting to see that sort of quick skew pipeline narrow a little bit, and as it narrows, we're going to see more of. It's not quite a regular smile just yet. We still have the puts trading about. They're about 10% rich to the at the money. Now that's not 10 vol points, but it's 10%. So if we're at like a 25 vol, that's 2.5 vol points. And then the calls are just a little bit cheap to the at the money. So we're seeing the calls approach the at the money volatility, and I think we're going to start to see that flatten out a little bit as maybe the sentiment is that the upside is finally going to take place. So we'll keep watching that quick skew, but nothing significant, not a lot of big change in direction, but just kind of a tightening of that quick skew channel. I like that term, Mark. I think we're going to call it a new one, a quick skew channel, because that's really what it comes down to.
Is that a new tool coming from the Quick Strike team, the Quick Strike, the Quick Skew
maybe
channel?
That's how we'll do the number. I mean, we have a way that we represent the number, and that should be, again, we're cleaning up our quick volatility tool, so that should be something that we can present by the end of this month. But the Quick Skew channel is narrowing in the crude. That's what we'll say for this week. But nothing other than that, nothing really of merit or note. Just sort of the same old thing, getting steady to beat up in the volatility, and we'll see what happens again, from week over week. As a reminder, you can go into the settings button there and take a look at what happened last week, the week prior, the week before that, and then month to date. So, experiment with the report, so you'll be able to actually have a pretty good idea what's happened. If you haven't been around, you haven't been paying attention, you can see what's gone on from the beginning of the month to date, and also what's going on all of last month. So it's a nice way to catch up on the markets.
Speaking of catching up, let's catch up with a product we haven't talked about in a little while here on the show, Mr. Nick. Not a heck of a lot lighting it up in gold this week. So let's look ahead, or I should say back at a product that's near and dear to your heart, going to be our crazy trade of the week. This is going to be out there in Eurodollars land. I'll let you get into the trade itself in a second, because it's pretty interesting. And you're an old Eurodollars guy, so this is right up your alley. But an interesting week out there in Eurodollars. Net, the futures, not a huge move in the futures net on the week here, only off fractionally. And same could be said for the vol. The vol popping up a little bit here, kind of in some mid-months. But interestingly enough, and also open interest up again 7%. The numbers, when you get out here to Eurodollar land, it's going to put into perspective some of the other products I think we're going to talk about in a little bit in terms of the orders of magnitude more volume that goes up out here in Eurodollars. Talking up about 7%, or about 1.2 million contracts increase out here this week. And a lot of that's coming in the Deeks, the end of the year time frame. Almost about 44%, almost half of the paper this week, Nick, coming in out there in the D's contract, which maybe you can speak to this a little bit of that. Is that normal for Eurodollars, or is this kind of an abnormal kind of bit of paper flow we're seeing out there? Only about 6% in the front month, so no love out there. It was all kind of back month all the time with the 98 1/4. I love these strikes as well. 98 1/4 puts kind of leading the charge with a total of, get ready for this, Nick, 499,117 of these bad boys lighting it up, including almost 250,000 of them, 225,000 going up on Wednesday alone, 152,000 of that opening. These numbers are just astronomical, and it kind of keeps going up in a strip there as well. 98 and an eighth puts, 98s even. Nice to see the eights back there, Nick. Kind of just brings me back to my old days, standing on the floor quoting in eights and teenies. It feels good in my bones, I think, at the end of the day. That said, you actually stood out here in Eurodollar land, so this is kind of like old home week for you. Walk us through this crazy trade and what caught your eye out here. Obviously, the numbers are kind of off the charts here, but what was catching your eye out here in Eurodollar this week?
Well, first of all, as far as where the action is going to be on the curve, it really becomes a function of where people start to think a lot of the Fed movement is going to be. Now, the fact that there's nothing going on in March, there is a meeting coming up here fairly soon, and I think March actually, I'm not 100% sure, but let me double check where that activity is, what that date is on that Fed meeting. And that's really what starts to happen. If you see a contract month doesn't coincide with what's going to happen in terms of Fed meeting dates, that contract will start to kind of come out of fashion a little bit, and then it's really just more of an event volatility type of thing if anything crazy is going to go on or something like that. So let me pull up the Fed Watch tool that we have. And yeah, so the next Fed meeting is on March 15th. So the March expiration in the Eurodollars is March 13th. So there may not be a lot of trade there. And the front month typically doesn't. The front month kind of comes to a grinding halt. It's sort of like, a jump. You're holding one end of the jump rope and kind of flopping it around. So more of the curve movement typically, is going to come outside on the further end of the rope. But, there's still pretty good probabilities that there'll be some action by the Fed. Prior to that, there's a May 3rd meeting, a June 14th meeting, a July 26th meeting, and the probabilities start to really increase for new target rates as early as the May and the June meetings. So the fact, well, probably more so in the June, but the fact that, and then there's another meeting out in December. So, and that really pushes it out to, almost two moves by then. So maybe people are positioning with that. Maybe there's some rolling going on. But, believe it or not, that's not even where the crazy trade of the day. But what you see in the Eurodollars, like when there was really no anticipation of anything happening with the Fed, you saw the whites, as we call them, the first year. There wasn't much trade going on in there at all, and a lot of the open interest was in the reds, or a lot of the trade was in the reds, greens, and blues, because and that was getting pushed further and further out as the window. I think if you remember, and it was a very depressing time for the rates market when they came out and said, I think what was it, 2010 or 2011? They said we're probably not going to do anything until 2014. Right, so all the trade pushed out to that part of the curve. So that's kind of how you see the volume move. So maybe there's more expectation, people positioning. I didn't see anything or have anybody mention me specifically about a big trade that happened in December. But if you want to talk about a crazy trade, I put some of the legs in our notes here, but I'm going to read you exactly what it was. And now, if you could tell me how a broker can speak to somebody to get this done, then you've got the magic bullet, it seems. So there were 5,000 of the short April, short May, 98. So 98, 125. So we call the strikes in the Eurodollars, you always pick out one number to the left of the decimal and one number to the right. So that's really the 81 strike. So I'll say it all out for the first one. So 5,000 of the short April, short May, 98, 125, 98, 97, 875 put flies as a strip, as a 2x5x3. So 5,000 times that 2x5x3. I mean, it's just crazy. So that's 10 legs in the butterfly itself times 5,000. So that's nuts. And then there was another, the green short April, short May had another butterfly trade, again 5,000 times. So you saw in a couple trades, and this traded together as a package, a 200,000 lot spread. Okay, so that's complete insanity. It's 200K lots. If you're a broker, you got to be pretty happy about executing something like that. I think a lot of it went down as a block, so maybe the floor didn't see as much of that, but I would constitute that as a fairly crazy trade of the day. I don't know about you.
I think that pretty much just about every definition it qualifies, certainly on the size side, and I think some of the other criteria there as well. You're right, that is an impressive trade by any stretch of the imagination. So was this, obviously, Eurodollars, like I said, going to echo the sentiment we see out there for rates and everything else like that. Was this a relatively common setup then you'd see out there in the Eurodollar pit then, where D's kind of leading the charge, or wherever the sentiment is coalescing around rates, that's kind of where all the action is?
Yeah, I mean, it depends. This week, that's what it looks like, right? I mean, if you go look at the Fed Watch tool on the CME Group website, you could start to see where the Fed funds is sort of pointing the market in terms of the probabilities of where the target rate's going to be. So now that's not gospel by any stretch, but it could be that based on I thought I heard that the comments from Yellen said that there could be a rate hike even sooner, right, than they talked about. So it's probably people just sort of digesting what's going on and then just taking positions. But if you use these butterfly stupid strip as an example here, I mean, those were pretty much openings in those contracts. So that's not like somebody was rolling into something. Somebody had an idea. That's the thing. I mean, everybody kind of knows why you do a butterfly, because you think you're going to settle between a certain range of strikes. But to do a 2x3x5 or a 2x5x3, it's just really, it's hard to imagine what the thought process was there. But maybe they saw some inconsistencies. A lot of times in the Eurodollars, or at least back when I was there, you would see a strike that would get sort of beat up, and that would be depressed around two strikes that were like, so if you fit that curve to those points, that strike would always look like it was a buy. So maybe somebody saw something that they wanted to sell from the practical standpoint, saying, this strike is where we're going to end up. Okay, so that's where the center of the butterfly should be, and or maybe something was mispriced around it. But it'll be I'm going to have to take a little bit closer look. Somebody actually asked me to plot that, or to chart that trade to see what it looked like, just as the ratio butterfly spread. And when I do that, I will tweet it out so people could take a look and follow along. So, and then we can keep it around and as a link, and then refer to it as we go towards these meetings. Now, remember, this was in April and May, and we have a meeting on May 3rd. So you got one that's before and one that's after. So an expiration that's before and an expiration that's after. So, yeah. Not sure why that happens, but pretty crazy. But that stuff, it goes on in there. I mean, that's one of the reasons why a lot of the activity stayed in the pit, even though this one took place in the block, is because they price up these really complicated multi-legged spreads, or spread stupids, or calendar stupids, whatever it is. And there's a place. It's not as easy to RFQ on the electronic side, and there's a place for it in the pit. People are there. There's a lot of liquidity. So it's just the way that pit has always been.
Well, before we get to the listener mail, we got to pay off a question from last week, Nick. If you remember, listener, I don't have his name. I apologize. I'll pull it up from last week's show to see what it was. But they were asking us about lean hogs and what was lighting it up out there. If we can get a little lean hog love, so that led to me coining my favorite new hashtag, hog love. Maybe it might be. Hopefully, the folks at Harley Davidson, maybe they're listening, look excited about it too. But that said, we got to pay them off before we move on here, listeners, or Nick. So let's get into a little hog love here. Talking about the lean hogs, you guys click on the lean hogs over there, cmegroup.com/TWIO. See for yourself what was lighting it up. Not the most rock'em sock'em week in hogs compared to maybe some of the recent weeks, but again, this is the third or fourth time people have asked me about hogs just in the past week or so. So when they have that ratio of, compared to probably on one hand over the last decade on this network here, so interest is growing apparently out here in all things hog. Hashtag hog love. And let's look here what was lighting it up. Again, futures kind of mixed on the week. A net kind of unched a little bit down in the front 2 months, a little bit up in the back portion. So kind of mixed across the board. Vol also a little bit of a mixed bag, kind of depending where you're looking out here in the term structure. I think that's kind of due to the somewhat sporadic nature of the volume out here. Now, talking about the volume we're seeing out in lean hogs is going to give you a little bit of a idea of kind of the order of magnitude we're talking about difference between Eurodollars and now. We were just talking about 500,000 contract trades. Here we're talking about lean hogs. And the number one with the bullet out here is the May 78. May 78 calls, lighting it up with a total of 3,934 contracts. So a little bit lighter, a little bit thinner out here in lean hogs. Still, that's a decent week, all things considered. Open interest this week up about 6%, for about 79, nearly 8,000 contracts out there. So an interesting week out here, lighting it up again from an overall volume perspective. Again, with the 78s out here in May, leading the charge about of that roughly 4,000 about 1,500 coming on Monday and Tuesday. A lot of that lighting it up in terms of opening, and the rest of the week, some sporadic contracts. Not so much today. Not much going up today out here on that strike. And the number 2, right on hot on the heels, are the 74. So upside calls, Nick, are apparently where the actual, I guess maybe in the money, depending on where you're looking on the futures here, are kind of where the action is. 3,700 of those 74s. Again, the lion's share of those on Thursday, about 1,500, or a little less than half here, going up on Thursday. And then we kind of drop off a little bit then to the 70 puts out here, also in May, with about 2,700 and change, 1,100 of those coming on Thursday. Again, all that opening throughout the week, so some opening put activity out here on the 70s and beyond. 66 puts also lighting it up to the tune of about 2,000 contracts. Not to be outdone, though, there was a little bit longer-term paper, even though about 3/4 of the paper, 76%, going up out here in the front month. So it's all front month all the time out here in the lean hogs. But there was a little bit of hog love later, a little bit farther out here. It looks like in July, the July 80s, Nick. So perhaps a little bit more optimistic paper coming in. 1,000 of them, pretty much about 500 on Monday and about 400 on Wednesday, and the latter chunks coming in on Thursday or so. So kind of relatively even throughout the week for the most part here. So 1,000 lot pretty much going up on those as well throughout the week of the July 80s. We haven't really talked about hogs that much. They're kind of I think a more esoteric product, Nick, than some of our other products we talk about, where you kind of really have to know the paper flow. You have to know the season and, the slaughter rates, all the other stuff that goes on out there. So it can be a little bit much for some newcomers to that product. I know a lot of guys who, when they left, let's say the SIBO, for example, would head on into other products out there like corn. A lot of them went into lean hogs. And I know a few of them came back to me and just said, I can't make heads or tails of this. And these are experienced guys who had been trading, equity options and index options for many years. You get into lean hogs, it's a different beast. You got to know the players. You got to know the customers. You got to know the open interest and the profiles and the term structure. And it can take a little while to get accustomed to that. So interesting stuff. That said, you got any thoughts here on this, our week here of hashtag hog love here on TWIFO, Nick?
Yeah, I went and, I don't know much about it, but I can go take a look at the charts and see.
I know you're a diehard lean hog, man. You don't have to be afraid to admit it on the show here, sir.
Yeah. I wish I knew a little bit more, so I don't sound so uninformed here. But I think that one of the common things I could say just by looking at the charts is that the calls are typically below the at the money, and the puts are typically above the at the money. So what we're and over the front contracts got like a 60 days to expiration. And one thing we are seeing was seeing that quick skew channel tighten a little bit, so the calls are approaching the at, and the puts are approaching the at as well. And I went back and looked at the constant maturity version of the 60-day lean hog quick skew channel, and what I did notice was there is occasion where the call and the put will meet at the money from a volatility standpoint, and then it'll bounce back off to a widening where the call is below and the put is above. So it looks to me like we're approaching a point where it's moving toward the at the money again. So that might be something that we could talk about in the weeks to come and see if we actually, because April is the 60-day. It's 59 days to expiration. It is sort of matching the movement of the 60-day maturity in terms of its pressing toward the at the money. So I think somebody should ask and keep us on our toes and see if we actually see that push towards that. And if it does, what the historical charts are saying is that it should bounce back off of that again. So maybe you're looking at where you can, if it gets there again where the call and the put are flat to the at, you can buy the call spread, buy the at the money call spread, sell the 25 delta put, and do the opposite for the put side, and basically take advantage of the fact that the call's going to go down and the put's going to go up in terms of volatility, and you're hedged with an at the money conversion or risk reversal, however you want to look at it. But that's probably the most interesting thing I'm seeing out there at this point in the hogs. But that's a nice thing about having the charts. I can know nothing about it, and I could just look and see what's going on. And then you look back historically, and if there's any sort of rhyme or reason, maybe it plays out again, and maybe there's something to look at from a trade standpoint. But I could probably get a little bit more color from some of my friends that are down there if this becomes something we're going to watch on a regular basis.
It's up to the listeners. If they keep writing in about hogs, we'll keep talking about it. Right now, they're at the table of the hog love. Get some more listener love. It's time for our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options. facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Like the man said, this is the portion of the show where you guys get to take the reins and put us to work, apparently. You guys are putting us to work every week with all sorts of product inquiries and requests and things like that. Last week we had lean hogs and some other stuff. This week looks like they got corn on the brain, Nick. So let's start there. This is Tom Rios. He's asking us, how has Mexico threatening to buy corn from Brazil and Argentina rather than the U.S. impacted corn volatility? So they're throwing more products into the mix for us, Nick. Let's pull up the cmegroup.com/TWIFO/corn or the corn bit to see if we can figure this one out for you. And this has been an interesting story if you've been following corn for the better part of the last month or so, certainly since the dawn of the new administration. A lot of their heated rhetoric on trade aimed at our neighbors to the south of the border there. And so they're surprised, starting to push back a little bit with some of their own heated rhetoric of their own. It seemed to take a little bit more concrete form, or maybe more histrionic form, depending on your viewpoint this week. I believe a senator or congressman down there in Mexico actually trying to cross out the U.S. from some of their contracts and writing in other countries' names. But actually, you look at the numbers this week. This week wasn't the big overall driver. The futures are off about a little over 1%, about 1.5%, about 5 handles net on the week. And we saw a vol kind of mixed out there, which I think is reflective of the fact that a lot of this, there was some histrionics this week, but a lot of this has been playing out in rhetoric for the past few weeks. And we saw that kind of playing out earlier in corn versus this week, where it doesn't seem to have been the most rock'em sock'em of weeks. I think a lot of people are seeing that this is a little bit more political theater. That I think they're waiting for a little bit more concrete action to be felt before they really start driving the product and the vol in one direction or another. Looking here at what was lighting it up this week, it was front month, the March, with about nearly 40%, about 38% of the overall paper. So a little bit more even flow than we're seeing in WTI or some of the other products out there that are super heavy. Lean hogs, 76% there in the front month. Only about a little more than a third over here in good old corn this week. And of the strikes that were lighting it up, again, the at the money is around 375 or so, depending on where you're looking, 380, depending on the futures term structure. We're seeing the 370 puts leading the dance this week with about 30,000 contracts. A lot of that opening, so maybe that also is reflective of some of the sentiment you were asking about before. Maybe people a little bit bearish here, given what they're hearing, and so they're lighting up some puts to the tune of, like I said, 30,000, 11,000 on Tuesday alone, and then 5,600 on Monday, and then even numbers throughout the rest of the week. A lot of that opening, so a lot of opening put paper, which is kind of interesting. We'll see how that plays out. Also seeing number 2. Also out there in the March timeframe, the March 380s. So the call still getting some love as well. Kind of a tight little strangle on the market there, 370, 380, right around the at the money. About 23,000 and change of those going up. The lion's share actually on Thursday, nearly 7,000 going up that day, and 5,500 on Monday. So about half of that 24,000 going up on those 2 sessions. Decent chunk opening on Monday, kind of mixed paper, some closing on Tuesday. So a little bit mixed back and forth throughout the rest of the week. And then, of course, 365 puts a little bit more pessimistic, shall we say, coming in at number 3, pretty close to those 380s with about 21,000 and change, including a big chunk, about 10,000 going up on Tuesday, about 40,000 of that, so about 40% of that closing. So interesting paper out here in corn this week. But Nick, overall perhaps not as rock'em sock'em as you might expect. Open interest up about 6%. There were a lot of headlines this week. There was a lot of noise, a lot of Sturm und Drang, a lot of theater around corn, it seemed, this week, but we didn't really see it materialize too much in the product. Maybe, again, kind of reflecting that a lot of this has been playing out for the last few weeks to a month now, so maybe the traders are a little bit worn out of it for now. Is that your take as well?
Well, to try to answer Tom's question without knowing much about the market in particular, if there was a threat to buy from other countries, then you would imagine that the price would go lower, right? And if you look at the vol chart in comparison to the futures, the corn vol tends to go higher as there's a chance of the price going higher. So I would imagine that if there's less demand for U.S. corn, then in all likelihood we'd see a lower kind of base volatility in that market just from looking at the reaction in volatility to the movement of the underlying. So that would be the first thing to sort of have an answer with or a hypothesis or conjecture with an asterisk, just based on me looking at what the charts are saying. As far as anything else, I mean, the market's been moving around pretty good, it looks like. So one thing we could take a look at is we could take a look at the rent on this to see if it's been sort of paying off. And it looks, at least from a today's standpoint, I haven't paid much attention. Maybe we could start charting the historical rent and changeover range, or changeover rent and range over rent. But it looks like there's enough movement in there that it might be tradable, and it might be worth taking a look at. But again, that's for us to watch a little bit more closely. So maybe we got to start putting corn on the old list as well, to take a look and see if its movement is sufficient enough to cover where the volatility is right now. But other than that, I would just leave it at saying my expectation would be that if there's less demand, we'd see a lower volatility environment. So Mark, I don't know what you think about that, but that's kind of my first thought.
That seems to be the way it's playing out. But you're right. At the end of the day, we can talk all these numbers, but the rent is kind of where the rubber meets the road. And as long as it's paying the rent, I guess the corn traders are happy, and the people who are looking at probably slinging some corn. Mexico helping to pay some of that rent, I think, these last few weeks, and continuing to do so at least a little bit this week. So interesting stuff. Nick, I'll let you have pride of place next. Which of these is striking your fancy?
Well, we could go with either one. I guess we can. Let's see.
We're just talking rent. You want to do rent? You want to do the rent question?
I mean, we could do the rent. We could do any one of the three, and we can go down the list if you want. We go to
all right, Nick, you're a glutton for punishment. I like it. Let's go in order then. We'll go to McTinney. I like these handles this week. He or perhaps she write in, hello to the TWIFO team and guest. Well, thank you, Mr. or Mrs. McTinney. They go on to write, can you give a little more color on the longer-term calls you outlined in gold options last show? Is this the beginning of a trend or just a blip on the radar? Any similar action in silver? Thanks for the show. Well, Nick, this is what you kind of highlighted this last week. And again, if you're playing along in the cmegroup.com/TWIO, if you want to see this, and you have to change some of the settings, obviously, but you want to go up top and you're going to see an expirations drop down. It's going to default to this year, so you wouldn't have seen this paper we were talking about last week unless you highlight. You can see that column there of Jan through Dec of 2018, and I'm going through right now and highlighting all those check boxes. You can do that as well. So then you'll see the full strip of months all the way out to the end of next year, which is obviously a much longer group. We didn't see a lot in gold this week, and certainly didn't see a lot longer term. But Nick, this was something you kind of spotted and we're digging into a little bit last week. Do you want to refresh our listeners on this, what you found, and if you have any other color here for Mr. or perhaps Mrs. McTinney, have at it, sir.
Yeah, no, I guess last week what we pointed out, and I think we mentioned at the beginning of this show, is that the report itself, you're not limited to what first gets displayed on the screen. You can click on the expirations and go out a little further. And typically in a lot of these commodities, or at least in the ones that we watch and I look at on a regular basis, that you're going to get trade out in the June and December contracts in the deferred year as well. So you won't necessarily get Jan through May and then July through November, but there is trade in the June and December contract, and we saw some upside calls trade, some significantly kind of oddball upside calls trade up in the December and the June. Now, you're not going to trade, well, I shouldn't say that. If you look at you can go to the open interest profile tool, which is also available for free on the CME Group website. And when you go there and you open up the gold product and you hit the summary tab, you'll see that in June and in December that the primary open interest is in calls, and primarily in out of the money calls, as you would expect. And in the June, that open interest has increased from June, or from 1 month ago, and even from a week ago. And in the December, it looks like it's about the same as it was over the last 30 days. So is it a trend? I think again, it's like anything. If people are going to start to go out on the term structure, if they feel like there's some inkling of the market moving out that way. Now, why they don't go out a little bit closer to where we currently are, it might be that it's too expensive. Well, it's probably not too expensive, but I have to look. I have to actually see how expensive like something closer to the money is in comparison to something a little bit wacky out on the term structure. So is it a trend? I don't know. But is it mostly calls out there? It's mostly calls out in the June and December of next year. But if you go look at the open interest in gold in general, you're going to see it's mostly calls. And I think somebody brought something up in one of the shows that was kind of good information for us in terms of why that was the case. But I think gold has been so low, or we are not near where our lows were, but it had been so low for so long that I think people's only expectation was that it was going to move higher. So therefore, we got most of our open interest in the calls, and it's all above where we are right now. So it's not like it's calls that were trading around the money where we were. It's all sort of anticipation of where this market's going to go. So taking open interest into account, maybe people are starting to feel that that's the direction we're going. Now, with that said, let's see what we look like from a curve standpoint. If we just look at, if you also available on the CME Group website, if you go to the cmegroup.com/quickstrike, no C, QUIKSTRIKE, you can go to, there's a vol term structure tool out there, so you can take a look at what the vol looks like. And inside Quick Strike Essentials, I dare repeat, free on the CME Group website, you have a vol curve tool where you can look and compare two curves against each other. And the curves all look pretty reasonable from a shape standpoint. So as much as there's a little bit of skew to the upside, so as much as there's a really wide imbalance in terms of open interest on the upside, the curves still look more like not quite a full-blown smile, but more like a smirk tilted to the call side. So we'll see if it's a trend. We'll keep watching. It's easy enough for us to take a look at, easy enough for you to do as well, to just go on TWIFO report and bring up a couple. You can load the whole term structure that we have and get the report for everything and see how the open interest is changing. But I think what you'll find is that it typically stays within the first year and then that June and December contract across most of the commodities.
Yeah, Nick, he also asked about silver. Why don't you dive into that really quickly, see if there's any similar action while I break down exactly what we were talking about last week to refresh people's memories here. And again, listeners, I mentioned the expirations tab. Next to that is a settings tab. If you go into there on the old Quick Strike /TWIO should work as well over there at CME Group. You can check report time frame from this week to last week. If you do that, like I just did, it'll tell you exactly the paper we're talking about here and what McTinney is referring to, which was out there starting off in the Dees. It was the Dees 2017, 13 half calls. Paper was lighting up to the tune of about nearly 8,000, 7,885 of those going up last week, as well as a little bit longer term, a little bit more optimistic. It was the June 2018 15 halves, so fairly optimistic. Nearly 10,000 of those going up as well. So some size longer term paper out there. I haven't had a chance to dig into silver. Did we see anything similar there, Mr. Nick, before we wrap up here on Mr. McTinney?
Yeah. If you look at if you go out to in this case it's July and December out in the silver contract, those are the only two active contracts out in 2018. There is some crazy strike open interest all the way. Let's see. I know in the July there was the 40 strike was open out in the December. And these were like some of the higher open interest strikes. And 45 strike in the December, and in the December 2017, there's some big strikes open in on the upside as well. So you'll see absolutely nothing, and then you'll see or very reasonable open interest, and then you start to see opens in the 25 to 30, the 35s, and the 40s in the December contract. So again, what you can do is there's a way for you to go on the open interest profile tool and just, if you click on the Jan through December 17 expiration list and go all the way down to the bottom, there's an aggregate list. So you can go and take a look and see what's open across the whole year, and it'll give you everything, all of the out to the widest strike. So you have some interesting upside openings in in the silver as well. Now, that's not something that we've really paid too much attention to. You can also go and look and see when that open interest, there is a history tab on there as well, so you can see when that open interest actually came into play. So you can go take a look at an individual strike and see how that has moved. So yeah, I think, Mark, wouldn't you imagine there's always going to be somebody who's taking a flyer on something, right? In case the world ends.
Yeah, especially in the metals. There are these die-hard proponents of metals. And I joked about the gold bugs before. I'm sure they're out there in silver as well, probably to a lesser degree, but they're still there. They have to have this stuff. They have to have upside. So maybe some of this is reflective of that. And there's always people who, at the end of the day, are going to want something hard that they can hold in their hands in terms of metals, some sort of hard asset. And they love their gold and to a lesser degree silver, and we see that reflected right now in the term structure, or excuse me, in the open interest. Let's go. We got time, I think, for one more here, Mr. Nick. And listeners, putting us to work this week. What's up with you guys? You wanted a nice, easy end of the week, and you guys making us work. Let's do the rent, because that's kind of relevant to what we were talking about before. A nice little comment here at the end of the day from Jim Church. He says, "I like the rent concept. Was that Nick's or Mark's idea? I think it should be a regular segment. Maybe who's paying the rent this week?" Well, I've said this before, Nick. First off, I can't take credit for the rent. That was Nick and his team who came up with that idea. I think it's a good one. I've also championed the idea of a little segment or an interlude like that on the show. We'll have to revisit it, I think, going forward. What's paying the rent this week? Maybe we'll have a little, what do you think, Nick? Maybe we'll have a little stinger for it, and it'll be a little segment. You like that idea?
Yeah, well, I think when I see those kind of comments, my first reaction is always to try to create a little bit of a report that will just sort of enumerate within a particular product. Again, I think the easiest way to look at it is if not necessarily the front month. So if it's like under 10 days, maybe we move out to the second month, but around the 30-day, or 30-day something between, whatever the second and third contract, if we're really too close to expiration. And we can easily show across all the commodities or the benchmarks which ones throughout the week went through and basically you could have scalped. You could have scalped your position if you were long to get your money back if you took advantage of the range and you got in and out at the right times, that type of thing. Again, scalping gamma and all that kind of stuff. That's a very esoteric thing. You got to be smart about when and when not to pull the trigger and that type of thing. But sure, we could start. For me, it's always the easiest way to answer the questions is we have the guys generate a report, and then from there we can talk about what's been below the rent. Like who's delinquent and should be evicted, and who should get a bonus for paying early, right? So, of course, I think that's a good idea, and we'll work towards having something that's accessible to everybody, maybe even from the report itself.
I like it. I like the idea. So our listeners putting us to work, but also giving us some nice little nuggets that we can use for the show later on. All right, Nick, let's get out of here before they put us to work some more. Guys, listeners are demanding this week. I'm just kidding. We love it. Keep hitting us up with your feedback, your questions, your comments, your suggestions for the show, your suggestions for products. You guys got them all in spades. We love to hear them. Hit us up over there at Options on Twitter or on Stock Twits, or hit Nick up at QuickStrike1. He'll be happy to answer them as well. Hit up CME. They'll forward them to us as well. That CME group over there on Twitter. Or you can find us all the usual places. Our website, of course, theoptionsinsider.com. Or over there, live stream every week, Friday, 1:30 p.m. Central. You can ask questions live there as well via Mixlr. Or, of course, the old-fashioned way, questions at theoptionsinsider.com. It's all baked in there in the mobile app as well. If you want to find that, make it easy in one place. So we love to hear from you guys. As much as we might complain, we still love to hear your suggestions and your comments. Put us to work. That's what we're here for. And before we go, speaking of work, Mr. Nick, what is cooking in the realm of all things? Quick Strike, you alluded some cool stuff. Maybe the rent widget. What's coming down the pike here from the team at Quick Strike?
No, I think I'm actually pretty excited about what you'll be able to see in the coming weeks. So and again, we're trying. We build tools and then we sometimes refactor them or add to them. We're always trying to enhance them. I think the thing to pay attention to, I think by the end of the month we'll have it out there. If you take a look at the open interest profile tool, so I think we've really finally locked that in. So it's a nice tool right now, but now we made it so there's some really nice aggregates and some good things available just on single charts, and then also a nice way to look at historical open interest information as well as open interest as Greeks. So you can see like how the total delta of the market has changed from an open interest standpoint, that type of thing. So there's some interesting things going there. A little upgrade to the settlements tool, and then For those who are subscribers, the quick volatility tool or quick vol tool, we've really locked that in as well, made it a lot easier to use, really comprehensive in terms of the information that's available and very simple to use. So if you have any interest in historical volatility, even if it's just for the active contracts, drop us a line and we'll point you where you can find the latest edition of that as well. So, and then of course there'll be some good tools coming out on the CME Group website as well. As those are ready to go, they'll be released. A nice expiration calendar tool that will let you get access to everything that's trading for a particular product very easily, as well as find expirations that are going to expire on or around a particular date. So if you're looking for an event play or something like that, those will be out there. And then again, don't forget, and it's gotten a really good feedback to this point, there is a CME Direct integrated version of Quick Strike as well available. So that's not the full version, but it's enough to sort of whet your appetite and really do some good things. And that integration is getting better and better as these weeks move forward. So a lot of good stuff on that front. And, got any questions, shoot us a note on Twitter or an email from the website.
All right, the best place to find all that, like Nick said, CMEgroup.com. You find all the Quick Strike tools there and all the other good stuff he's talking about over there. Can't find this show there yet. We'll work on getting that. But in the meantime, though, you can check out a new show from our good friend of the program here, Blue Putnam, the senior economist over there at CME Group. It's called Off the Charts. Check it out. It is pretty interesting stuff. You can find that over there on CMEgroup.com. So check that out. It's worth a listen. And we'll have that Blue back on the show again pretty soon to talk about his new program and his burgeoning gig here as a radio. He's taking my job here, listeners. What's he doing? All right. Well, we love that show. Check it out. And on behalf of Nick and our friends over there at CME, including Blue, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in so many great questions. Keep them coming. And we'll see you next time right here on TWIFO.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.